Welcome to Real Talk Hilton Head with David and Dale Cross, the real estate lifestyle podcast of Coastal Carolina.
Join us as we share stories from our community, insight into the local lifestyle, and the real scoop on real estate.
From market trends to home design, we dive deep into what it means to live and thrive here.
Discover the state of mind and philosophy of the Low Country that enriches life through personal growth, health and wellness, and human connection.
Whether you're a local or thinking of becoming one, we're here to guide you through the ins and outs of living this coastal escape.
Tune in, relax, and enjoy the conversation with Real Talk Hilton Head,
the podcast of Coastal Carolina.
This episode is brought to you by the David Dale team, powered by eXp Realty in Hilton Head.
Well, hey, everybody. Thank you for joining in today. Whoever is in on this call, whoever's not in down the road, you're going to, one second, you're going to see this on the podcast. But my name is David Cross. I'm a team lead with the David Dale team, powered by eXp Realty in Hilton Head, South Carolina. I'm also the co-host of a local podcast called Real Talk Hilton Head. It's the real estate lifestyle podcast of Coastal Carolina. And a lot of you may be wondering, what in the world does blockchain, crypto, all that have to do with real estate? Well, you're about to find out today, because it is going to be at the forefront of how real estate is going to be done in the future. And we have some amazing guests today. I'm going to read a little bit about it. So basically, we're stepping into the future of real estate. Blockchain, crypto, tokenization, and they're already transforming how we buy, sell, and invest in property. And today, I have three pioneers who are leading this revolution. First, we have Tom Truong. He's a global icon with eXp Realty, and he is truly a global icon. He's a former president of AREAA, a founding voice in the Trusted Smart Chain movement. He's a visionary pushing the real estate world into the Web3 era. We also have Matt Nicosia, the founder of T7X. It's a cutting-edge platform revolutionizing private market investing through tokenized real-world assets. It's a key term we're going to want to remember there. He's a serial entrepreneur with decades of leadership in finance and tech and blockchain innovation. He's also a key player in the Trusted Smart Chain ecosystem. And rounding it out is Billy Beach. He's the co-founder of Trusted Smart Chain, a U.S. Air Force veteran and a longtime investor and educator in the crypto space. He's making the complex world of blockchain simple, secure, and accessible. These aren't just experts. They're building the rails of what's next. So we are going to dive in right now. Gentlemen, thank you for joining us today.
Thank you. Good to see everybody. Thank you guys for your time.
Absolutely. So, we're gonna just get started. And to everybody out there, I want you to remember the days when listings used to be printed and then we went to Zillow. Back in the day, you used to handwrite letters and then it went to email. You used to literally have to go rent a cassette, a video cassette tape, and now you stream everything. What that world was is what is happening now in finance. We're moving in this direction. What the internet did for those, it's doing to the financial system. And and especially home, your equity, your investments, blockchain is going to touch them all. And this isn't just about Bitcoin speculation. We're going to get beyond that. This isn't the Bitcoin meeting, okay? It's about homes, how they're going to be bought, sold, owned, financed, and passed down. So with that being started, Tom, I'm going to start with you. Okay. For someone who's never used crypto or doesn't even understand what blockchain is, how would you explain it in the most simplest of terms?
In the simplest of terms, one can, so we use the word tokenization of real world assets a lot. We will be on this call. And what that means is that real estate professionals, real estate buyers and sellers can now sell a fraction of their real estate or purchase a fraction of someone else's real estate like never before. That they don't have to, in the good old days where you bought a property, you basically went out, if you want to invest in a property, you bought it on your own. The only other way to do it is to do syndications, okay? And for syndication deals, most of the world needs to be an accredited investor. And with what we're doing, what tokenization of real world assets is doing is breaking it down in very small fractional ownership where the average consumer from all over the world can participate. Okay.
Yeah.
Matt and Billy, why don't you guys give your simple definition of the question here?
Yeah, I think
No,
you
go
know,
ahead.
in basics, tokenization is freedom and the lack of total control by a third party or intermediary, right? And it's access to potential instant liquidity. I think the biggest draw for me into this space 4 years ago was the idea that number one, there was no barrier of entry. Okay, like Tom was talking about, most real estate projects, 25, 50, $100,000 barrier entry fees, right, to keep a lot of people from participation. With tokenization, I mean, you could have single tokens that are fractionalized down to 8 decimals, right? So someone in India could participate in the crowdfunding for a development project here in the US, and they could buy $5 in token. They could buy $2 in token, right? And if that smart contract, and we'll get into that, is set up for a distribution model, it doesn't matter if one investor does $1 million and gets a 10% distribution off of that contribution, or like I said, someone in India does $2. They get the same fractional distribution. Now, obviously, that distribution is going to look different from a financial perspective, but it leveled the playing field, right? The little guy has the same exact opportunity to invest in that fractionalized asset as the large guy does, right? So barrier of entry elimination is massive, right? For number one, crowdfunding, right? Or adoption or access to capital, but also participation. Here's the second biggest piece is a liquid market. Okay. So let's say Tom does a new development. Okay. Tom's beautiful work, rent, live lofts, right? $10 million fills it to capacity. So Keith, if you were taking part in that investment, and let's say you gave Tom 100 grand because you liked him, what is your potential exit? Now, obviously, you're getting a distribution, which is fantastic, right? Let's say you're getting a 10% dividend over the year, right? Which is a great cost of money. You're getting a distribution every quarter. That's great. But Keith, what if an emergency pops up in your life and you need that 100 grand back? And you call Tom and go, Tom, I know it's been 2 years and I signed a 7-year note, but man, I'd really love to liquidate, right? Tom's going to give you, number one, every anti to your sob story, right? But number two, at some point, the conversation is going to go, Keith, I just don't have the equity. I don't have the access to capital. I'm not liquid yet, and I don't have, an acquisition on the horizon right now, right? I'm not to that point where I'm ready to sell off the paper on this, right? So tokenization solves that problem. Keith, if you owned 100,000, let's just assume that we fractionalize Tom's asset into dollar share tokens. Okay. Keith, if you wanted to liquidate, you don't even need to call Tom, right? You go to the exchange where those tokens are listed, where there's a secondary trading market for those assets. Now, Matt's going to get into some of the regulation on this. Okay. But but point being is you go and you sell your tokens on the secondary market, Keith, and now you're out, right? You're investing, wow. You've got your money back, you've exited. It is completely regardless of Tom's equity position or plans for merger and acquisition or sell-off costs or ability to refi, because there's a secondary market of investors that are looking to take over that position because that position is paying a dividend, right? So wow. I know that's a lot in the short answer, but basically limited barrier of entry or no barrier of entry and access to liquidity. That is what tokenization provides in the shortest form.
That's amazing.
Are you thinking about making a move to the Low Country?
Whether you're searching for the perfect home or you're exploring vibrant communities on the coast or dreaming of a new lifestyle, we're here to help.
Contact the David Dale team today and let's make your dream a reality.
Matt Nicosia. Calling on you, Matt.
Sure. Obviously, the question about blockchain itself and really what it is, the main key piece is its decentralization of ledgers. Ledger you can compare to what your account ledger at your bank. Your bank keeps your ledger, you don't have it, and you don't see anybody else's but your own. And what blockchain has done is allowed for multiple ledgers to be out there on one asset. So and through forms of cryptography, they're able to validate and confirm. So you have what's called public and private ledgers. In the public ledger space, which is what most people see, like a Bitcoin or Ethereum and the others, anyone has access to that blockchain ledger. So you can see all the wallets, you can see everything that's on it, and that makes it transparent. And the key piece with, we'll call it cryptography and crypto, which is where the name crypto comes from, is an open ledger system where you're able to see what a bank has. You might not see the people behind it because it's the accounts are limited to the alphanumeric, call it wallet codes, but it's you're able to see that it's exact amounts and the transactions between those. And the key then is how do you with that cryptography and with that open ledger, you're able to see truth and transparency, and then kind of tying it into the token type of structure. All what's really happening is it's an open ledger system that's open and transparent, but also protected. And I hope that makes sense, David.
Oh, it makes perfect sense. So, and I think you touched on something there for a lot of people when you say the public and private ledgers. If it's on a public ledger, I'm assuming a lot of people are going to be like, well, you said it's alphanumeric, but there's a privacy. It's even though they could see the wallets and see the moving around, there's still some protections in there. Is that right, Matt?
Well, the protections, how wallet structures, it's an alphanumeric number, and you don't really, so you have anonymity behind the number, but you have transparency, meaning anyone can see how many coins you have.
Okay.
Anyone can see the transactions that you've done. That makes that public side of it, but also asks for instant settlements, instant transactions. So when a transaction happens through cryptography and consensus, you now have every single ledger, which are, depending on the chain, you have hundreds of thousands, if not thousands, of immediate syncing ledgers. That transaction that happens is the settlement is instant. So there's none of this. Let's wait 4 or 5 days for the title company to do the insurance. Let's wait until it comes back from the county recorder's office. When the transaction happens, it's done. That's the neat thing about the blockchain.
So it gets rid of that friction.
Yes.
Yeah, no longer are the days where we have to wait for the title search to come back. No longer do we have to wait for our fiat, which is the US currency, the Japanese yen, the Mexican pesos, to clear the entire banking system, taking the fees along the way. It can happen instantaneously through blockchain and cryptocurrencies.
Because I was
right.
going to ask that too, Billy, when you were talking about everything earlier in Tom's project and what have you. Most people are going to associate, hey, if I'm going to get into anything, I either got to use my capital, use my cash, or I got to get a loan through the bank, right? What you're saying is this changes how that is all done via these exchanges and being able to come in and buy this fractionalized point. Am I getting that right there? That sort of that bank's role is going to change a little bit?
I think you're going to see a little background on me as well. As I was in mortgage lending for the better part of 22 years, all the way up to national sales director. I ran a Ginnie Mae issuer secondary, so I'm we're speaking the same language here. But things like verification of deposit can be done in seconds, right? Verification of account holdings can be done in seconds, right? Proof of funds can be done in seconds. Escrow money could literally you could be standing at a property showing your client, right? Your client walks in and goes, oh man, this is the one I've been waiting for. It's absolutely beautiful. How many offers are there? Blah, blah, blah. And you're like, hey, let's get it tied up. Well, there is no more. All right, well, man, it's 3:00. Like I'll get to the bank first thing in the morning, right? Now it's, you call the title company, right? And say Matt's title company and say, Matt, send us over your wallet address. We're going to send over, the $5,000 earnest deposit in Ethereum right now. We're going to tie this thing up, right? And it's the money sent in seconds. And here's the key point, guys. This is the coolest part. That could be Sunday night at 10:00, right?
There's there's this none of this 9 to 5 shutting down on Saturday and Sundays anymore. It's 24/7 frictionless.
Exactly. Now let's take this a step further. I don't know, if you guys have done business in Georgia, which I'm assuming you guys are near that area. Okay.
I have.
A lot of the agents that I had when I was doing lending were in Georgia. I did a ton of business in Georgia. Okay. What takes forever in Georgia? Title searches. Right?
Oh, 100%. Yep.
Delay closings all the time out there. It's very difficult. Title's a nightmare in Georgia. Okay. Imagine using blockchain. So again, guys, blockchain, when you open your cell phone, okay, and you open your banking app, right? Every one of them is the same. It doesn't matter if it's Bank of America or USA or whatever the case is. Okay. There's a ledger, right? For some of us, we remember the checkbook days where you had to carry around a paper ledger, right? You had to go home and write stuff in and add.
Yep.
Okay. Same thing. Blockchain is a ledger, but what's cool is it's a ledger to the entire world. Anyone can see the data. Okay. So let's talk about that title search for a second. Let's say you had a new developer 5 years ago that built a home, put the initial inspection, right, and all the pertinent data, title information on blockchain, right? 3 years later, sold the house to someone. They updated that on blockchain, right, to the new owner, all the title information, okay? And now you're going to do the third transaction since inception of this home, right? Well, what typically takes forever, and we've all had done those properties where there's title issues and they have to get, now we got to reach out to the plant. The plant's going to take a week to clear off this old lien that doesn't even belong to whatever, right? Well, imagine if that could be handled in literally, guys, seconds, not minutes, not hours, seconds. So we're verifying deposits, verifying income potentially, right? For your buyers, you could verify W-2 data, you could verify tax returns, literally in seconds. We're taking buying a home from 30, 45 days, depending upon, you know, kind of the complexity of that loan. So guys, I mean, this could be potentially done in days
That's fascinating.
and again, this is not crypto. Okay. Now crypto could be a part of that because if you're transferring funds for tokens, but that's what blockchain technology is. It's access to public information in milliseconds, and it's as fast as AI, you know? So yeah.
So forgive me, because again, I'm still a neophyte in this. So you saying they could put this on blockchain. So I've actually had a situation where I was refinancing somebody the same, David Cross, right? There's a million of us out there. Something showed up on my title work, delayed my closing, had to prove it wasn't me. It was some lien. It was actually like an IRS lien. I was like, that's not me for sure. And how does that get prevented on blockchain? Is that, you know, because when you say it just can be put on blockchain, like who's putting it on? How does that even work?
Yep. So that's going to have to take title companies to step in and work with counties, right, to obviously take all the data off of, you know, previous paper files, current, you know, digital files, right, and put that stuff on blockchain. Let me give you guys a hint. Okay, there's a senator out of Ohio, Bernie Moreno's big.
I know Bernie.
Okay, so me and Matt have spent had multiple dinners and breakfasts with Bernie. Bernie was the first one. So in Ohio, vehicle VINs are done on blockchain, and Bernie did that. Okay. I was speaking to someone in EXP, as a matter of fact, down at our last event with Tom, down in Tulum. Tom, what's Tasha?
Tasha.
I don't know if
Yeah,
that's
Tasha Chang. Yep.
But Tasha owns a title company, and Tasha, we conversed for about an hour and a half one night on blockchain and title. It's actually something she wants to tackle and start doing. I digress.
Okay.
I want Matt to talk about this because we have just now partnered with our blockchain with a third-party company called Nomics, and they have a very unique adaptation to blockchain called Nomics ID. And Matt's actually running that, but Nomics ID and Matt's explanation can really clarify how that data could be tied to one individual, which would be immutable, unchangeable, unhackable, and available in seconds.
Okay.
Are you thinking of selling your home?
With our exclusive Elevate package, we combine over 50 years of experience, cutting-edge data analytics, our unique marketing strategies, and our extensive network to help your home rise above the rest,
While maximizing your sales price and minimizing the time on the market.
So contact the David Dale team today to learn more.
Love to hear that, Matt.
This is actually something with which in the SEC roundtables, which they had over the past couple of months, one of the key pieces is how do you deal with identity theft? How do you deal with verification? Just your same case, David, just like having the same name. What Nomics has, which we've adapted, is a digital ID. What this digital ID is, you set it up and it does your background check, certifies who you are, pulls all of your data and ties it to a digital ID that you can then transfer with yourself. So all the backgrounds and all the work's been done. So when something comes up, instead of it being to your name being a differentiator, it's your unique digital ID, which is going to be part of this future. You'll have multiple ones. If you've done Google accounts, you actually probably don't know this, but there's a code called OAuth and authorization, which is built into your individual Google Gmail. which you're able to log into multiple accounts. We built this in with Nomics for blockchain and for crypto use. So, for example, if you were able to, let's say, on your own property, if obviously the county was able to do blockchain records, which you've got a couple issues, it's not just title companies, you have the counties that need to adopt keeping track of title via blockchain. You could opt into building a digital ID on yourself and on your owners into that. So when anytime there was a search, they would then be able to show that, nope, this digital ID is tied to David, not to anybody else. And here's all of David's background, even though it's privately held because it's on your digital ID, but the third party behind it has all the verification necessary for that transaction to prove it's not you. And we've done that. So you can, within our platform, when it comes to digital IDs and when it comes to transactions, your digital ID is unique to you. It ties your background, all the third party verifications have already been done on you. And it keeps you also from identity theft, which is very important. That can happen in many cases, including real estate.
Okay. Wow. So, wow, there's so much to unpack in that. That it's just amazing. So, with this, you mentioned about the counties. Like, how there's a lot of counties. I don't know how many counties there are in this country, but like, this sounds like a mammoth task to move us, like, towards that. I mean, how do you get unity and unison for everybody to say, "Hey, yeah, this is great. Let's adopt this." I mean, is this going to be like, South Carolina, Beaufort County does it, but York County doesn't? I mean, how is that going to work?
It's going to be a combination. It's going to be certain states that could force it on the counties, and certain counties are going to adopt. There are a lot. We're just a blockchain company that we deal with pieces. There's a whole bunch of already groups pushing to do this. So I see this happening behind everyone's backs in a quick manner. It's already pushing head steam ahead, full steam ahead. So it's not as far off as you think, and it will happen. And they are adopting to it. Now, here's a funny part. Probably guess who's trying to make sure it doesn't happen? Your title insurance companies, because they charge you a fee. How many people have collected on a title insurance policy?
Yeah.
Yeah.
No.
They're earning 80,
Nobody.
90% commissions on the
Yeah.
title insurance
Yeah.
policies.
Yeah,
They
I
don't.
go ahead. Yeah. I
Good.
can
I
imagine
think
this whole thing. There's a lot of parties along the way that probably are not excited about this. They're gonna have to figure out a new way to make some money. Everybody's got their hand in the chain. Well, I want to cut.
the biggest problem in blockchain adoption is the intermediaries who make a lot of, we'll call it low risk money. Like, as you said, that need to find a new career.
Yeah, yeah. Hopefully, they invested in what we're talking about here.
Yes, that's right. They invest in the blockchain here. Well, you know what?
So
Behind the scenes, though, it's funny you say that, David, is, there's stories after stories where years ago, the establishments, the big banks are telling people that cryptocurrency is a scam.
right,
Yet behind the scenes,
Jamie Dimon.
they're pouring their investments, their money into building blockchains.
Yeah, yeah. No, I agree. It's so funny. It's a 180, which is, I think, why we have to have this conversation, because the media, the banking institutions scared everybody, that this is money launderers and human traffickers. And that's all that, this was all good for. And now we're coming to this point of like, well, wait a minute, the entire system's about to switch to this. And I'm supposed to be excited about it. It's like, yeah. Because, like I said, the internet changed everything, I would say, for the better, and that's what it's going to do for our money and just take down all the barriers. There's no reason I shouldn't be able to send, we got family in South Africa. I should be able to send the money right now. They get it in 30 seconds without everybody else. I actually had a good friend I supported. He was in ministry. I supported him in Africa. To send him money on a monthly basis, it took me weeks. I had to pay all this extra fees. It was crazy and he was in Cameroon. It's like what you're saying, I should be able to do this now in seconds, right?
That's right.
Yep.
Yeah.
And with a fraction of the fees.
Yeah. All right. Well, I need to tie this back into real estate. Okay. So I'm going to ask you a question. Why should your average homeowner and why should your average realtor care about this, and how is it going to change the way they're going to do business and change their role in all of this?
I'll take a first crack. I mean, the average homeowner, if they learn how to, if they learn the system and they get involved in one way or another, number one, it's going to reduce their costs in the long run, such as paying for title search, right? Where that cost is on the owners, and if everyone comes on blockchain, that title search is done in microseconds instead of 3 weeks, and it costs them $1,200 for a title search, right? The homeowners will have total transparency, and the world will have total transparency in terms of who owns the property through and through and through, and we don't have to pay an attorney all that money to do the title search at the same time.
No title insurance either, right? You really, no need for it.
You'd have no need. Yep.
Okay, that's, $1,300, $1,400, $1,500 right there every time.
Yeah. And I'll give you a real world situation. I'd like to hear from Billy and Matt, but I'm in the process of tokenizing one of my investment properties. It's an Airbnb. I bought it during COVID for $160,000. All right. If you remember, during that time, interest rates were down to 2.5%, 2.75%. I locked in a loan for 2.75%. I put in another $160,000 to renovate it. So I'm into the whole damn thing for $320,000. Today it's worth about $900,000. And I want to access the liquidity in my property. So there's about $600,000 in that one property. Well, I can do one of the two things. I can sell the property and pull my $600,000 out, but that stops my cash flow from the property. It's cash flowing like crazy, right? Or I can refinance, but if I refinance, interest rates are now at 7%, not at 2.75%.
And you're not going to get the 100% equity either.
And I'm not going to get 100% equity. So what do I do?
And if you did sell it, you pay taxes.
Yeah, exactly. So I'm going through a company called Lofty.ai. This is not their commercial, but that's the company I'm using. What is Lofty AI doing? They are tokenizing real estate, single family properties, multifamily properties, to basically sell off a portion of it. So I'll be able to sell, let's say, 30% of my property. I'll pull $300,000 out. I still control the property, right? And I take that $300,000, go buy my next investment. I still control 100% of my property. So not 100%. The investors own 30%. But like Billy said earlier, if they went and I'm going to promise them 12% return on their money. Anytime that they want to go and sell their portion, they can just put it right back on Lofty AI and sell, and someone takes over. They don't have to call me up.
Okay, so I know this makes sense to you, but I can imagine I'm going to have clients out there who you just melted their brain. Okay, so let's break this down. You got 100. What's your mortgage on that? Out of curiosity? I mean, like you got 100.
My total debt on that is, call it $320,000.
Okay, so you got $320,000 on it. It's worth $100,000. You got just under $600,000. You're saying that Lofty is going to purchase that portion of that equity? Is that what it is?
Lofty is going to help me tokenize that property.
Break that down. What's that even mean?
Let's say I'm going to sell 30% off. So I'm going to sell $300,000 of the equity of my property off. My investors are going to own 30%. I control 70%. I still have voting power. I own the majority, right? And I'm going to, as the investor, I'm going to promise my investors who give me $300,000 a return on their investment. Let's call it 12% return on their money. So every month, every quarter, there's a distribution of 12% to their account. As long as they stay with me, they get the 12%. 5 years from now, if that becomes $1.3 million, they also share in the upside from 900,000 to 1.3 million. They share in the 30%
because they have that equity share.
Right. But I maintain control of my property the entire time. I can build in my property management fees. It's fully transparent. They understand what my property management fees are, and I just accessed liquidity in my property without doing a line equity of credit, right?
So then my question is this, because people think in terms of liens and stuff like that. So you have the liens from the first. How does that work with them? Like, does the bank care? They don't care, right? Because they only care about
Billy and Matt. Take it to the next level. We are tokenizing, real world assets. We're helping them raise between $50 to $100 million. Same scenario. How does that work?
Yeah, Matt, go ahead.
Well, let's answer a couple of key pieces. Obviously, the banks are going to care as long as the debt's being serviced. So in Tom's scenario, he's able to keep the debt service in place. He's able to then take a portion of his equity as long as the token structure, which they're doing in place. They may, some groups, they have the ability to file secondary lien on the property, depending on how that's structured. And so you're basically taking fractional ownership. Instead of having to sell the whole thing, you're taking portions of it. And in most case scenarios, in our case, for example, there will be liens filed so that the tokenization piece is actually secured by a legal document that can be enforceable. One of the key things that happened in crypto in the very beginning, there was a lot of projects and tokens after that had no tie legally to a real world asset.
Yeah.
So the way to do that is a structure where there is a legal infrastructure that has two key pieces. Number one, it allows you to tokenize. So there has to be law in place that says a digital token can have ownership. And secondarily, you have to do a law. You have to then take that digital ownership and then be able to have a right of ownership to a real world asset. Real estate's pretty simple. You can do two ways. You can have an entity. Wyoming right now is the most flexible and has a lot of case law around digitization of tokens. You can legally, as a company or an entity, take your shareholder log or your ownership log and put it on the blockchain. That's key piece, right? That's legislation in place that allows that from a state. All corporations are governed by states, and each state has their own rules. And then the second part of that is you can do it through an entity. You could do a corporation. The term of the corporation then would then have that lien on that property. So the property in question would have a lien from an entity, a legal entity that has the legal ability to then tokenize or digitize that ownership via blockchain. What we've been doing is taking investment assets, whether it's warehouse properties, agriculture properties, to hotels, to real estate properties, putting them into a fund, which is normal. Most people have participated in fund structures where the fund is legally allowed to have title and ownership to a real world asset. And then we're taking that title and ownership, which is in a Wyoming entity, and blockchaining it, meaning we're taking that shareholder log and making digital, instead of physical stock certificates, they're digital stock certificates that are on blockchain that are tracked and transparent, tied with digital IDs, right? So you have that
Yeah.
digital ownership to it and making it
Yep.
so it could potentially be transactable. Does that make sense?
Yeah, makes perfect sense. Hope it makes sense to people out there. I have a question though. So, because I know a lot of people, they would use loans to strip equity to avoid taxes, triggering that. Is it much the same way? Like when Tom's scenario with him doing that, does that trigger any sort of tax implications at all?
Depends. So if Tom's doing a structure where it's deemed a loan, then yes. If Tom deems it where it's actually selling of equity and there's not a covenant in place, then it would be a different scenario. And he obviously, everyone should seek their independent tax advice.
Right.
Give
Amen.
tax advice, no our CPAs. Please consult your tax professional. But
Amen.
there's a difference between an equity participation and a debt covenant. And
Got it.
there's some specific structure around how to put those in place.
Okay. That's awesome. And I hate to again go back to very basics. Tokenization is just simply digitizing that ownership. That's all it is, right? In its simplest form.
Digitizing the ownership and making it fractional. Though it's just taking, if you had 100 units of a limited liability corporation that owned a golf community in South Carolina, right?
Right.
You decided to take 30 of those. And we want to say, look, there's 30 units of this LLC. And now we're going to we're going to create 30 individual ownerships. But with tokenization, you can divide that by 16, 8 decimal points. So you could have almost a humongous number, not just 30, but
Yeah.
a humongous number of those, depending on how you structured your token contract. They call them smart contracts. The joke is they're not really smart. I call them stupid contracts. But if you can create a contract that can make a unit divisible, that is the divisibility or the tokenization of that underlying unit. Does that make
And
sense?
that's the magic, isn't it, Matt? Because to Billy's point earlier, Tom had mentioned the accredited investor, and that's basically just code for somebody who's got a shit ton of money, pardon my French.
Right.
And the rest of the little guys, they can't have access to some of this stuff. But what this does is it says, hey, we're that guy who had all the money, had all the opportunity. It says to the guy working in the factory down the street, you know what? Because of that, those zeros
Fraction
behind there,
ownership.
you can
Yeah.
come in and get your portion. Am I correct in that? Am I assessing that right?
But let's be very clear.
Okay.
That creates a security,
Okay.
because the ability to have fractional ownership where a person is now, even if it's real estate, there's two components here. The actual fractionalization of a real estate property could create a security out of the ownership,
Okay.
not just the real estate investment. So, as long as the asset follows existing securities laws and is transparent and has a proper exempt registration that allows them to, it could. What you want to be wary of are the projects where they say, here's ownership in this, there's no information. You got to make sure that there is proper information and transparency brought into those tokenization projects, because that's where a lot of fraud happens. So
Is that
that
sort of
is
what
still
the
developing.
FTX thing was? Stuff like that?
Little
Or is
different.
that
So the
okay?
FTX issue was you thought you were buying Bitcoin on their platform, and they didn't have the Bitcoin.
Oh,
Your statement said you got Bitcoin, but they didn't have it. That's exactly what all your Wall Street firms do with your stocks. Okay, that's called naked shorting, dark pool trading, and hypothecation. That's what they're allowed to do, and they all let that happen. With tokenization on these pieces, there needs to be a proper accountability and a true record in place, but also transparency when you do fractionalization of any type of asset. The the jury is still out on the difference between tokenizing a company that has assets and tokenizing your car or your tire or your wheel. They are able to tokenize artwork because they consider artwork a collectible, and there is no cash flow. With a real estate asset where there is cash flow, that becomes a security. And there is still some debate on how that has to happen. So as people are looking at these projects, what we've chosen to do is make every asset that we're doing actually file with the SEC, have audits on an annual basis, and be
yeah.
complete, transparent, and truthful, and have third party opinions to back up those assets to protect investors.
Okay. I'm probably going to jump ahead here because I was going to ask you. So I've heard a lot about this whole concept of like with the whole Ripple lawsuit. Security versus a I can't remember what the whole thing was about, but this Clarity Act that they're talking about, does that deal with how, is it where are these that are going to get managed? Is it the SEC or the what is it, the CFTC?
Yeah, the CFTC. Well, kind
Yeah.
of. You've
Okay.
got what's called stable coins, and then you have securities. XRP
Okay.
has lots of utility. That just means use.
Yeah.
And the XRP, they were proven to not be a security in the secondary market. That means once you already have XRP, if you want to use it, it's not considered a security.
Got it.
The unfortunate part within their settlement is they said, fine, it's not a security after you already have it, but they did so much solicitation to have people buy XRP in the beginning. That was a security.
Got it.
So it comes down to the solicitation and how it's actually created. There is clarity, and the SEC has already given clarity on that. So there are some key pieces in that just need to be looked at when you're dealing with crypto. If you're buying crypto in the secondary market, like an XRP, Bitcoin, Solana, and even Trusted Smart Chain, those are not securities. They have a lot of utility.
Okay.
When you're buying it, if somebody comes to you and says, hey, you should buy this XRP because it's going to go up, you got to be careful. because you're not
Yeah.
participating, you're buying it from them. If there's not utility, that could be considered a security. Once again, seek your legal counsel when it comes. We do not give legal advice nor recommend accordingly. So that just
Amen and amen. Listen to what Matt just said. All right. So Matt, I want to let's dive into this project, this T7X, and sort of what the smart chain. What are you guys doing? I want to just dive into it. Share with us what you're doing, how it works, how people can get involved.
Sure. So there's a couple key pieces to it when you're doing tokenization and when you're creating cryptocurrency. I would call them three key pieces are to the ecosystem. Number one, you have to have the actual assets. What are you going to do? Secondarily, you need a system. You need to have a platform that is going to keep all those ledgers. Remember, we talked about those ledgers, right? Those ledgers that keep
Yep.
track of it. And then third,
Yep.
you need a transaction-based system. So a couple of key pieces. Obviously, the trusted smart chain is the railroad tracks, or it is the cell phone towers that do all the ledgers and communication. That is a decentralized blockchain system that is, we believe, not to be a security, where it's like a Bitcoin, it's like an Ethereum that allows people to operate those ledgers. And if they operate those ledgers just like Bitcoin, you actually earn that Bitcoin. And that's the fees for running this decentralized ledger system. And that is something which we've been involved in from a software standpoint, building out significantly. Close to 20,000. We call them nodes. They're really computer systems that keep track of that ledger, that people are buying the software, running it like a Bitcoin miner, and building out those ledgers. Now, that's great. The next key piece is what are you going to do with it, right? Where's your utility? Where's your use? That's where the assets come in place.
Yep.
Whether there are collectibles, whether there's people like prepaid credit cards, you can use them at restaurants and hotels, certain coins like an XRP or pieces. We call those our real world assets, and we call those tokens, or those are smart contracts. So we've got projects that are hotels in Tulum that are taking a fraction of their ownership and tokenizing, to real estate projects all over the place that could be involved, from agriculture to hotels to single family residences in different places, or they're fractional ownership and they are securities. Hence, they have to do a registration with the SEC. They have to do audits, have attorney opinion letters, and be transparent. Well, that's great. So you got the assets, you've got the railroads. That means that the assets can operate on the railroads. Well, what if people want to participate? Well, you need a transaction-based system. T7X is a platform similar to a Coinbase, similar to a crypto.com or a Binance, that has put specific protocols in place that is compliant around the world, meaning wherever the jurisdiction is, they follow the jurisdiction guidelines to make sure there is a potential transactional based system. So if people do want to, as was stated before, they would like to transact or sell or get in and out of cryptos as well as real world assets, they have a system that keeps track of legally all of those types of transactions and does all the reporting in place so that people don't have an FTX debacle. They do not allow for settlements unless it's real buying and real selling, which is the promise of blockchain. If you own a real estate property, which you've, like Tom has taken a portion of it, he doesn't want them to be able to hypothecate that, and meaning sell 5, 6 times they bought it from Tom. That brings Tom's value down. You want a true trust and transparent system that's able to keep track of all that, so that you as an owner, as an investor, as a participant, have truth and transparency. So those are 3 key pieces we've built in. So hence we have the trusted smart chain, which is the blockchain. That's the Bitcoin. That's the Ethereum that house all those independently operated ledgers that are keeping track of that, do cryptocurrency, do cryptography and consensus to validate transaction, instant settlements. Then you have the assets. The assets are, we've got a Tulum project we call Shella. We've got Grow Estate, which is agricultural projects. These are real transparent securities that are on the trusted smart chain, that use the trusted smart chain for all of their transactions. And then we got the T7X that has a regulatory thing and had regulatory compliance to make sure that assets are properly tracked with instant settlements and keep all that truth and transparency. Those three things coming together, amongst many others, and Trusted Smart Chain has many other partners as well that can adopt its truth and transparency system that allows for utility and use. Without utility and use, you have XRP's problem for a while ago, which was people bought a lot, but nobody would use it. Now,
Right.
banks are starting to use it. And so you build all those key pieces in so that you have a system which gives the promise of called the blockchain or truth and transparency.
And that's awesome. I mean, everything is, that's really, you broke that down in very simple terms. So for a lot of people, I think, because this is the question I get, I talk to people all the time. Hey, have you paid attention? How I get on? And personally, I use Coinbase, right? That was sort of that's how my son got me on. So when you bring that up, because I say Coinbase was my on-ramp, right? It was sort of like the closest thing to dealing with a marketplace, right? It says, hey, all this stuff is here. And I could trust I guess, right? Hey, I'm putting my money in here. I'm going to transact. I got my stuff and, blah, blah, blah. But so the T7X platform, is that sort of where people would have, like your average everyday person would sort of have their on-ramp to what you're doing? Or am I missing that?
There'll be two things. We call them issuers. Let's call the real estate project itself. They
Okay.
would be able to, our integrated system, be able to directly solicit direct from them. And then the T7X platform would be a secondary platform that allows, depending on the regulatory environment, for people to transact like a Coinbase. And there would be off ramps and on ramps, meaning they could go to other cryptos. They wanted to sell an asset, go to Bitcoin. They wanted to go to US dollars. They would like to go to different pieces. All that's available with instant settlements. So it's a Coinbase plus, we'll call it.
Okay, that's awesome. So where are we at? And I know regulation is a big part of what we're talking about here. The United States, everybody's sort of trying to take this role of, who's going to be the leader in this. Where are we at in all this process? And let's also talk about the term you hear a lot, stable coins and all, like, where are we at in this whole process of this thing moving forward? Because it feels like we came out of the dark ages and it was being bombarded and trying to be killed in the womb, if you will, to now all of a sudden, like, hey, wide open. Where are we at in that process of making sure that people are sort of safe, if you will? Any investment, never guaranteed, but because we're going from here to here, right? What's the bridge?
The bridge and the transition are truth and transparency. So Europe is actually ahead of us. They've been very clear about their guidance for a while.
Okay.
They have VASP laws and CASP laws, virtual asset service providers and crypto asset service provider laws in place. There are other countries that are ahead as far as giving clarity around regulation. The US is behind thanks to the previous administration. This administration currently is trying to catch up. The unfortunate part is there's a lot of intermediaries that don't want it because the US has created a very big city called New York City off of intermediaries. And there's a lot of power behind that. I still think the US is behind. The stable coin, we'll call the Genius Act, does talk about stable coins. It gives some clarity that makes it where everyone wants to buy a bank now. Banks don't like it because now everyone wants to be a bank because that's some of the requirements, or it's easier if you're a bank to have a stable coin. They've made that you could definitely tell who lobbied for the stable coin. It was definitely the banking industry. They wanted to control all the float. They wanted to have it so they kept themselves in power. It's not as beneficial for certain businesses, but there is still some clarity to be had in the US. I do think we're still behind, and we are the largest investment market in the world. And as we adopt, hopefully we'll catch up. Now, does that mean we'll be behind forever? I don't think so. But there is a lot of speed that's happening in this development. Projects can be launched faster. Now, you go back to your question about transparency and safety. There's a lot being built around digital IDs. Nomics has been a great partner with us. We've seen a lot of other groups do that. There's a lot of, because Europe is ahead, they've got a lot of things in place, and we're adopting some of those rules here in the US. There's a lot of acronyms called the travel rule, KYC, KYT, KYB, know your client, know your business, know your transaction. there's a lot of pieces in place that are much tighter in Europe than they are in the US. And I
Okay.
think those are best practices that can be adopted in the US. We comply with our European laws because we're licensed in Europe. So we bring that over here. And Coinbase and a couple others are starting to do those. Kraken and Binance do those in Europe already. They're pretty on top of it. Now, the next question comes down to, you said you were term safety. How do you make sure you're not going to lose your wallet? A lot of people, I
What?
got hacked. I
Yeah,
got
well, I was gonna say,
hacked.
do you go to cold storage? You know, because that's the other term. I remember first time somebody
Cold
said, "Do you got
storage and
cold
hot,
storage?"
yeah, cold
I'm like,
storage.
what is that?
They got a new term called warm storage. They've got cold storage, hot storage, and now warm storage. Now, what we've chosen to do is we've actually gone with a custody structure where they're actually insured up to 10 million euros per incident, and they're a top defense cyber defense firm out of Europe that insure the wallets. That's I think that's gonna custody is gonna have to go that route. We're already going that route on purpose because people want to know there is something insurance because a lot of people will lose their seed codes, which is like your secret codes, which is
Hmm.
why what 15% of Bitcoins disappeared because people lost their codes
And they're forever gone.
and forever gone, right? So, but that requires a custody structure in place. It also requires a lot of security, cybersecurity. So I think that's going to be a growing business. We don't do that. We actually outsource that to a top firm. Uh, Everyone has to stay in your lane and do what you do best. And I think there's going to be a lot of auxiliary services that are going to tighten that up. I do see that as being favorable and already in place. And I think those key parts are in place. It's just going to take the adoption over the next year or so where people will feel comfortable. There right now, one of the biggest issues with AI is cyber hacking. It is bad.
I can
That's why you
imagine.
don't answer the telephone from somebody you don't know who it is. You don't answer an email. You don't answer a text unless you know who they are. You click on those texts, those emails, and they can go right into your computer and hack everything. So, from a system wide for everyone, be very careful. If you don't know who's sending you a text or an email, even if that you know who it is and it looks suspicious, call them on the phone. If you really send this, be very, very careful, especially for the older crowd, my parents included, that really don't just click on any text or any email anymore. They hide within that click these viruses that get in and steal all your data and your information. So you got to be very, very careful. But
Yeah, and
there's a lot
yeah,
to be
because
done.
can you break down? Because again, you know, you guys are really at the top of your game, right? And I mean, obviously you're in deep, and you're talking to people that really get it, but that's probably 1% of the people I know, right? So I want to break down this sense of custody, you know, because like most people think they don't understand really the term custody and what does that really mean, and how does that work with my tokens, like because like right now Coinbase has custody of my tokens, right? And I can have custody. It's just like pulling money out of the bank, right? I can store it in my safe in my house, store cash. Same thing with these tokens. Just break that down for anybody who might stumble on this video and be like, what is he talking about with custody and who holds it? What does that mean? Are you a bank? Are you just like a bank? I mean, does that make any sense?
Sure. So there's a couple of different key pieces. What's called centralized and decentralized. A centralized structure is where you have a third party in place that kind of manages or deals with a certain portion of the transaction. Custody is technically Centralized custody is technically a third party that will hold it for you on your behalf, just like any type of other fiduciary would. And their job, group we use, actually ensures against hacking. So if there is a hack, they have a top tier insurance policy where they cover 10 million per incident. Now the crypto community doesn't like most of the current crypto community does not like when someone else controls it for them. They want to control themselves. They want to be decentralized. And
Mm-hmm.
when you're decentralized, you now you're holding it yourself. Do you hold it in we'll call it a digital wallet that's connected to the internet at all times? That's considered a hot connection or a hot wallet, which could be subject to hacking. Or do you put it on the thumb drive and disconnect it, put it in your safe, and now it's called cold, where it's not connected. Hot means connected. Or do you do a warm that's got a combination? The decentralized methodology is usually considered favorable as long as it's in what's considered cold storage, where it's not connected to the internet, where it cannot be hacked. unless for some reason they discover your seed codes or your 12-word phrase and they find it somewhere, they can access it, and once they have those 12 codes, they can access your assets anywhere.
Yeah.
So how do you then decide, well, as an individual, do I want to keep it decentralized and away from institutions, or I want to put it with an institution and let them hold it and hope that they're going to keep it safe and insure me against it? Now, from a regulatory standpoint, most of the transaction systems, you need to be a centralized structure and you need to have custody in place. So make sure you go with a group that has an insurance policy that insures against hacking. That's best practices. Some groups have multi-signature, they call multi-sig, meaning you need 5 or 6 people, 3 or 4 people to actually log in at the same time with 16 pieces in a certain order for it to be accessed. Well, a group had that problem. They got hacked for a couple of billion in, not too long ago. So there is,
Wow.
our preferences go with an insured group that has a proper insurance policy, because if it does happen, you're going to protect yourself and get paid. And there are groups that want to hold it on their own, that want to hold their own little Trezor wallet or whatever it might be, which is a small little thumb drive that they can connect and they can disconnect and put it in their safe at their house. That's great. Write down your seed code. But if you lose the thumb drive, you lose your seed code, guess what happened to it? It's all gone.
Poof.
So
Poof.
is it a higher risk of you, an individual, to lose your thumb drive and lose your seed phrase, or to put it with a custodian that has an insurance policy to protect yourself? And everyone has their own internal preference on what they choose. And I think just like any type of diversification, people should look at diversification of their security as well. Some they're going to want to have in cold storage, some they're going to want to have in custody. That is a personal preference, which people need to take a look at in the future when it comes to digital assets. I hope that makes sense.
It does. Well, it does to me. So Trusted Smart Chain, you guys would be able to custody. Is that correct?
No, so Trusted Smart Chain is a decentralized structure.
Okay. So I
But we have a
misunderstood that.
partner. One of our partners is T7X, and they have a centralized insured structure.
Got it.
We are a decentralized blockchain. Trusted Smart Chain is a decentralized blockchain that people can download the code. They can set up their own wallet. They can do whatever they want
Oh,
to do.
okay.
But if you want to
Yeah.
move it to a system like T7X that does have insurance, does have insured wallets, they are allowed to do so.
Okay. So then how would people, God, I feel we've been on for an hour. I feel like I could talk to you guys for like days right now, but I don't want to do that because I'm getting a mind meld again. And I poured hours into freaking YouTube videos and watch all this stuff. I want to just talk about real quick, and we'll wrap this up. How would people get involved with your group? Where's their on-ramp? Who would they contact? Where should I send them and tell them if they're interested in finding out what you're doing? And how would they get a piece of this exciting new world that we're going into?
Billy, why don't you take that? And as you're talking, I'll feed some links for people since we're at the top of the hour soon.
Yep.
So right now, where we're at, from Matt was, as Matt explained, a kind of ecosystem structure is we're building the framework for the blockchain, right? So a blockchain is built by ledgers. Those ledgers are stored on nodes, right? So imagine a room full of hundreds and hundreds and hundreds of computers. We're basically building out that infrastructure right now virtually with nodes. Okay, Tom's got, I don't know how many Tom. Tom has a lot of nodes at this point. I don't know how many Tom has.
Why doesn't that surprise me at all?
I got an S load.
Yes. And to clarify, to put it in simple terms, what a node is for most of you, hopefully you guys have at least heard of Bitcoin mining, right? May not understand exactly what that is, but basically back in the day, you could buy a computer, you plug it in the wall, put a script on your laptop, and for creating and storing transactions on Bitcoin, you would get pieces of Bitcoin, okay? Fractions of Bitcoin. That is called mining crypto, okay? The nodes on our blockchain effectively store the data, right? Because everything is virtual and you no longer have those big bulky computers. You could do it virtually. And for storing that data, you get distributions of Trusted Smart Chain coin, and our Trusted Smart Chain coin models the same framework as Bitcoin. So same economics, same distribution model, same deflationary supply, right? Why outmaster the master, right? So we structure our tokenomics the same. So basically where we're at right now is we are constructing our blockchain with 200,000 nodes. We've sold somewhere around the range of somewhere between 19 and 20,000 at this point. And we have about 180,000 left. As I said, Tom's got a lot, and basically your reward for operating a node is you will earn Trusted Smart Chain coin, which will be not only used as utility within the T7X platform, right? That team fractionalized the assets and does the real world assets, right? And they are the blockchain for that. But we have other partners that we're bringing on as well. So that's the most immediate level of participation, is to be a node operator and actually help build out the framework of this entire blockchain. Okay. The second piece is once T7X has its first assets, it's not approved, qualified with the SEC, which should be here, hopefully in the next month or so, then investors will be able to take part in those actual fractionalized assets. But by being part of the community, so there's buying a node, right, and contributing to the network and helping build out the blockchain. Then there's the community aspect. In the Trusted Society, which is the community that we build around the blockchain, right? We do crypto education twice a week at 9 a.m. We call it Breakfast Club. We have a fantastic affiliate program in there. You can earn a couple extra bucks for referring some friends. We do events almost every quarter. We just got back from an incredible event down in Tulum at one of the resorts that is actually tokenizing using our blockchain.
Oh, wow.
A lot of our members were able to go down and meet with the billionaire that owns those resorts and hear from his mouth as an actual owner of an asset why he's tokenizing and offering fractionalized portions of that asset. So here very soon, investors will be able to take part in actually investing into that regulation structure on that SEC approved asset, and transacting on that T7X platform. So for right now, the most immediate is Tom put a link in there where you guys can get started operating a node. And what does that mean? It's very, very simple. Okay.
Break it down. Yeah.
Basically, buy a node. The more nodes you have, the more tokens you're going to get, right? Equal distribution happens daily, and it goes across all active nodes, right? So if there's 100 nodes, 100 nodes get the distribution of the token, right? If there's 10,000 nodes, 10,000 nodes get the distribution, which means the more nodes you have, the more token you're going to get. If you relate it way back in the day, if you had one Bitcoin miner or 20 Bitcoin miners, or in case of Tom, I don't know, 70 or 80 Bitcoin miners, how much Bitcoin would you have today, right? So that's the benefit of owning more nodes. You get more token, okay? And then basically our support staff will set you up with your hosting solution. One of the hosting solutions we offer is a point and click. Tom's done it. It's very, very simple. That is what's called proof of work, okay? That is you connecting your node to the internet to provide that decentralized network and power for the blockchain to operate, okay? Very simple, couple clicks of a button. That's it. You're up and running. It's very, very easy.
What's the time commitment somebody would have on this?
It's about 45 minutes probably from initial setup to hosting. And then, as often as you want to log in and giggle as you look at how many tokens you have, right? So, it's like I said, as long as your node is hosted and our hosting party, just keep your credit card on file. It continues to charge every month. It's $2 per month per node. So very inexpensive. And as long as you are connected, you're going to earn those digital rewards. And this is the cool part, guys. You earn the way we structure the tokenomics, which is the economics and the distribution of our tokens. Okay, there's only 21 million token will ever be minted. That will take about 130 years, which means your node, as long as it stays active, stays hosted, and participates to the network, you will earn Trusted Smart Chain coin for the better part of 120 years.
That's amazing. Yeah, and okay, because I want to wrap up, but going back, because you talked about, that's a key thing I don't think people understand. They're so used to dollars and don't understand the diminishing value, that, we've lost 100% of the value in 100 years, right? So could you touch base for people on that, how important it is to have limited supply and also the utility, like, because they're going to be thinking, I hear Ethereum, Bitcoin, and how it's the use case, the utilization of it, that is why it's value, not only how few it is, but also what specifically is it used for. Can you just touch base on that in a very simple term for people to kind of grasp?
Absolutely. Imagine if over the last 10 years, the Fed didn't print any more dollars, right?
Right.
It just stopped, broke the printing presses, got rid of the mints. That's it, right? There was no new money made. How much stronger would your dollar be today? Okay. Now let's rewind all the way back to when, the very first currency, let's say the first dollar bill, okay, was presented, right? And they said, okay, we're only making 21 million of these paper dollars, right? And get out there and spend them. That's all we're making. How valuable would $1 be right now?
Oh my gosh.
It'd be spread. Let's just talk about the US. $1 would be spread across, or $21 million would be spread across 300 million people in the US.
Yeah. I mean, yeah.
Right. Our dollar, you buy a house with $1, right? Most likely,
right.
or maybe,
or a fraction of $1.
Yeah. Right. So that's the idea. And that's where cryptocurrency really has its brilliance. Okay. So think about this. For the average person. Now, I was in lending for years, and we all know there's zero down projects and all the and loans and all these things. Okay, but let's imagine they're warm. Let's go back, 15 years, right? 15 years ago, you had to save what, Tom, for a $300,000 house? About 50, 60 grand.
Yep.
Okay, to buy a house, right? Now, let's assume you're an average income family. Okay, that takes you 5, 7, 10 years to do. Well, what's happened? Number one, to the market. So you were saving for this particular house, but in that 10 years, you no longer can afford that particular house because that particular house is doubled in value, right? Now, what happened to that savings? You're saving, you're putting money in, and the dollar's devaluing. And you're saving, you're putting money in, and the dollar's devaluing. It's like this ladder you can never climb, right? Now, imagine if 10 years ago, right, you bought Bitcoin. You wouldn't be financing.
Don't get me started, Billy. I could have bought Bitcoin.
You wouldn't be buying your house, right? You'd be getting a loan against your Bitcoin and paying cash for it. Okay. Yeah. That's where it's going to affect the real estate market as well, is because as soon as people start to realize I can leave my money in a CD or in my savings account or whatever kind of garbage that our government continues to devalue, or I can go try to wire $25,000 out of your account today and see what kind of Spanish Inquisition you get, right? Yeah. Versus buying Bitcoin or any other cryptocurrency that isn't meme scam nonsense. There's some out there. Watch out. Okay. But put it in a solid layer 1 project and just let it accumulate, right? That is what we framed Trusted Smart Chain. Okay. The first 4 years, 2.6 million token get minted per year. The next 4 years, 1.3 per year. The next 4 years, 650,000 per year. We have created a limited supply and higher demand. We all know what happens to the housing market when there's limited supply and high demand. we've all seen that. We're all in the realty game, right? That's the goal. That's the golden goose. Now, like you said, what is the reason to buy it? What is the reason to have it, right? What makes something valuable, okay? When you talk about buying a token, what happens when you buy a token, especially in like a nice large chunk, and what? Let me explain in some better terms. Why is everyone in crypto freaking out right now that governments all around the world are talking about buying massive amounts of crypto to put in their reserve? Because when there's a lot of buying, what happens? You're allowed to charge more. Price goes up, demand goes up, okay? Some of our utilities from some of the grant recipients, T7X is one of those projects, okay? Trusted Smart Chain takes money, gives it to that platform to use the blockchain, right? Some of these projects are going to be $100 million projects doing dividends. Well, David, if you are in one of the asset managers and you have to do 15 million a year in distribution out to investors, and you're using the Trusted Smart Chain coin, that 15 million comes in from the project in fiat, right? Let's just say it's oil. It's one of our projects. Okay. Yeah. You then go to the T7X platform, buy $15 million in Trusted Smart Chain coin and then facilitate the distributions out to the investors in that project. Well, what do you think happens when you buy $15 million of a token? Well,
it goes up.
If it's on an exchange and all the bots and all the traders and everybody watching start seeing the little line go up, they're called green candles, guys.
And everybody.
That's right. They jump on the train and the train starts going faster, throwing more coal in the fire, right? What the favor that T7X has done for us, right, with using our blockchain is created that function, that utility of high buying pressure in order to facilitate those distributions, which is going to catch the eyes of the whole crypto world, right? And then, there should be hopefully some price appreciation there, right? But I can tell you, it won't be deflationary like what the U.S. has done to the dollar over the last handful of years.
Yeah, and I think that for everybody is the lesson learned here, is that that's the power of this, because the game we've been playing has been rigged this whole time, and unless you were in on the game, you were never going to win. And this is a chance. This is a generational shift that's to 1,000 generations for some families that could change their lives if they do this now and they get involved now.
And here's the difference, David. We're talking about I saved the golden nugget for the very end, and I like Matt to close it out. But here's the golden nugget. Most of my friends who invest in crypto and buy the coins, what they're doing is they're buying the coin. In other words, they're buying the egg. Once they sell that egg, it is gone. At Trusted Smart Chain, to participate as a node operator, you are not buying the egg. You are buying the goose that lays the golden eggs on a daily basis for the next 130 years. That's what we're doing here at the Trusted Smart Chain. So you're eons of years ahead in terms of what we are doing. And the reason why we have real world utility, real world usage is what Matt is doing at the T7X, is he has decades of experience bringing hundreds of companies public. He and his team have helped many private companies, small cap size companies, raise money, 50 million, 100 million, even more. And through our blockchain, Matt and his team can help them raise capital to expand their businesses at a fraction of the cost on our blockchain. And the real thing that hooked me is that all of the real world assets that Matt helps bring on our chain has to be Reg A, SEC cleared.
There it is. That's key. It's so funny, Tom. That is a powerful point, because I remember a long time ago, I had a friend that owned a pager company. He used to sell cell phones, like before cell phones became. And I remember he had this big company, he sold it. And I said, why are you selling it, man? Your company's so successful. He's like, I'm getting into cell towers. and at the time I didn't get it, and I'm like, shit, that's like, that was, but it's a similar concept, right? Like, don't buy the token, buy the thing that's the underlying force behind it all, So guys, all right, Matt, you want to close us out,
Matt, please?
Yeah, close us out, because this has been awesome.
Well, the future of decentralized finance is upon us, where we have the chance to put the power in our own hands, the public's hands, the people's hands, instead of in the hands of the intermediaries, and create true value for both buyers and sellers and creators of assets, creators of developers of projects. People have a vision to put it in place, and this will affect the real estate market heavily. It will speed up transactions and processes. It will make the move of assets faster. And I would recommend everybody get involved in their own understanding of what blockchain can apply to real world assets, specifically real estate, and to be a part of the egg ownership, we'll call it the hen farm, to have the endless supply, because there's only a certain amount of hens available. Unfortunately, there's not an infinite supply. And looking for that truth and transparency is what's most important. What's the trust and transparency at all levels to make a system that can be adopted? You want a system that people want to adopt into. You better be truthful, you better be transparent, because the days of crypto lies are over. and everyone should have a chance to participate if they choose to.
Outstanding. Gentlemen, I can't thank you enough for joining us today. This is so powerful. I hope anybody who comes across it understands what they just received. And I'm super excited, Tom. We're going to share this with everybody. Don't be surprised to see David up there, getting some nodes, man.
That's right.
You got me
That's right.
juiced up. But thank you again. We so appreciate it. And I look forward to seeing where this thing goes with you guys. But thank you.
Thank you for hosting this podcast, Zoom call. Appreciate you.
Thank you,
Billy,
David. Thank you,
Matt,
everyone.
Thank you so
Thank you,
much.
guys.
Take
Thank
care.
you, guys. All
Bye-bye.
right. We'll talk to you soon, Tom. Thanks.
Don't forget to follow, like, share, and subscribe to Real Talk Hilton Head and leave us a review to help others discover the Low Country lifestyle.